after a weird rollout last week, the era of spot Bitcoin exchange-traded products has begun. In total, the SEC approved 11 of these things, 9 brand new offerings, and 2 conversions of existing crypto ETPs. Last Thursday, they all started trading, and now that we've had a few days to absorb the impact, well, I got to explain what's really going on here. First things first, despite what you may have heard or read, these new Bitcoin investment vehicles are not exchange-traded funds, or ETFs. Instead, they're exchange-traded products, or ETPs, which makes everything more confusing. ETFs are a type of exchange-traded product, but they're not the only type. The SEC has been very clear that these Bitcoin vehicles are ETPs because it makes a huge difference from a regulatory perspective, and maybe for you too. All exchange-traded products are regulated by the Securities Act of 1933 and the Securities and Exchange Act of 1934. But ETFs are also covered by the Investment Company Act, or 40 Act, which is a law that regulates investment advisors. Anybody who issues an ETF is considered an investment advisor, which is a real pain in the neck, legally speaking. The 1940 Act imposes a bunch of fiduciary obligations on investment advisors. Governance requirements like independent directors, restrictions on transactions with affiliated parties, leverage restrictions, custody requirements, and more. Put simply, funds regulated by the 40 Act, including all ETFs, need to be managed on behalf of you, the investor. I bring this up because these protections do not apply to the Bitcoin ETPs that got approved last week. Less than ideal, as you want these kinds of protection, especially because there have been multiple instances of chicanery when it comes to crypto money management. One more caveat. While the SEC approved these exchange-traded products, you shouldn't take that as Gary Gensler, the head of the SEC's company, offering some sort of endorsement. Okay, it's not an endorsement. It's not the government saying these are fine. Matter of fact, it's really quite the opposite. If you read the statement Gensler issued last Wednesday, it's crystal clear that the SEC felt their hands were tied here. He noted that the SEC had explicitly not approved more than 20 previous filings for these things in the past. But in one of those cases, they got challenged in court, and the judge ruled against them. The court criticized the SEC for blocking spot Bitcoin ETPs while also allowing other types of funds that track out, for example, Bitcoin futures, and basically forced them to reconsider. Should we care that the SEC didn't want to do this and essentially granted approval of these new spot Bitcoin ETFs by court order? Crypto proponents likely don't care. They were never big fans of the SEC anyway. So why should they care about whether or not the regulators are happy about this? But you know what? When I step back, I still think it's important to stress that the SEC basically did everything in its power to stop this stuff from happening. Now, that said, I'm not as stridently against these new vehicles as Gary Gensler is. Sure, I'm not a crypto guy. I've dallied in it, but and done okay, frankly. But at this point, Bitcoin's been around for 15 years. It's fairly well established. And I don't want to try to stop anyone from speculating on this stuff as long as they do their research. Of course, I'm not totally sure what your research would be, but that's not my problem. In the end, I feel a lot like Jamie Dimon, as a longtime Bitcoin skeptic and even an antagonist who's now pretty apathetic about the subject. Here's what Dimon said about, well, it's an expurgated version, when he joined CNBC's Squawk Box at the World Economic Forum in Davos.
What do you think of there's about a dozen big financial companies, Fidelity included.
Number one, I don't care. So just please stop talking about this. And I don't know what he would say about blockchain versus currencies that do something versus Bitcoin that does nothing. And maybe that's not different than me. But, this is what makes a market. People have opinions. This is the last time I'm ever going to state my opinion.
I'm going to hold him that if he ever says it again, I am going to just reach into my screen. I'm going to throw a brick at him. I also respect the position of a firm like Vanguard, the gigantic privately held asset manager founded by the late, great Jack Bogle, a leading proponent of passive investing and index funds. Vanguard has refused to make these spot Bitcoin ETPs available to its customers for their own protection. It even went so far as to take away support for all Bitcoin products, including the Bitcoin futures ETFs that it had previously allowed. In explaining the decision, Vanguard said simply that these things, quote, do not align with our offer focus on asset classes such as equities, bonds, and cash, which Vanguard views as the building blocks of a well-balanced long-term investment portfolio, end quote. This decision has upset some customers, but hey, Vanguard's sticking to its principles like it always does. Now, there's a bit of a horse race element to this story. 9 new ETPs launched from scratch last Thursday morning, while 2 existing exchange-traded products converted to a spot Bitcoin strategy. And we can track who's attracting the most money by following what are known as, quote, fund flows. the amount of new money coming into or out of an ETP on any given day. Now, we don't have the numbers for today yet. They're published every evening, but we can see through the first 3 days that about $750 million in new money has come into the 11 spot Bitcoin ETPs. 10 of them brought in roughly $1.92 billion, but $1.17 billion also came out of one of the converted ETPs, the Grayscale Bitcoin Trust, which has far and away the highest fees in the space. Plus, that about the $750 million in net new money also doesn't include the cash that's coming out of other Bitcoin-related ETPs, such as ProShares Bitcoin Strategy ETF, which offers exposure to Bitcoin futures. VanEck, an ETF issuer that has one of the new spot Bitcoin ETPs, also announced today it would be liquidating, dissolving a separate Bitcoin future ETF because it's now no longer necessary to use the futures as a workaround strategy for Bitcoin exposure. Now, if you include the more than $160 million in outflows from the largest of these Bitcoin future ETFs, you're actually talking about less than $600 million in new inflows, net new inflows, for the Bitcoin exchange-traded product universe. Now, mind you, these are rough numbers, but they give you a sense of the scale of interest in these new vehicles. So this is what you've got to ponder. How should we feel about $600 million in new money coming into the space? Like I said before, I'm taking a page from Jamie Dimon here. This is a caveat emptor situation. So you can do whatever the heck you want as long as you keep that in mind. But I will say this, Bitcoin's been running since June, when BlackRock filed for spot Bitcoin ETF. Since then, the total market capitalization of Bitcoin has nearly doubled from $485 billion to north of $800 billion. Now, let's think about this. I can't say the entire rally since last summer was in anticipation of spot Bitcoin ETFs, but that accounts for a big chunk of it. You've heard the people from the industry said the approval of spot Bitcoin ETFs would lead to more institutional money coming into crypto, and that's the whole ballgame for these coins. So for now, I'll just say this. I'm surprised that inflows for the first few days weren't much larger. It makes me believe that Larry Williams was right last week when he warned of more downside ahead of Bitcoin. You know, $400 billion to $800 billion, and then this is all the money that comes in. That money was put in anticipation of a huge amount of money coming in. This is worrisome. But the bottom line, you can make up your own mind about what to do with these spot Bitcoin ETPs. I just want to make sure that you know what exactly you might be putting your money in and how little went into these funds versus how much Bitcoin went up when it found out about the news that there would be these kinds of products. Mad Money is back after the break.
Coming up, a cup and handle pattern means we're spilling the tea. Can the markets expect an election year boost? Cramer goes off the charts to find out. Next.